highs. Following gold's robin ascent to the heavens after banking fears funneled inflows into the pressures, it now appears that the shiny metal is experiencing a market correction. In this report, we aim to shed light on the catalyst driving the precious metals price and assess future outlook. The wide uncertainty in the global banking sector, even though subsided over the past week as central banks rushed to calm investors' nerves, kept the market on its feet, remaining on edge despite a number of contradicting comments from policymakers around the world. Last week, we had Fed Bullard's speech in which it was stated that financial stress has been on the rise in recent days, implying that despite Treasury Secretary Yellen's attempt to fix her previous remarks to be in line with those of Fed Chair Powell in regard to providing ample liquidity to banks. It is still the opinion of Fed Bullard that these developments have led to volatile trading in banking equities and increases in measures of financial stress. This underscores the structural pre-existing problems within the financial industry, peeling into the fear that the Fed may be afraid to proceed with higher interest rates in fear of breaking the banks. Moreover, the shiny metals price was positively affected following remarks by Fed Kashkari, whose tone appeared to be changing to a more dovish outlook, implying that the balance of power within the Fed is now shifting, as such they may decide to hold rates rather than increase in the next meeting if fears of contagion keep spreading. Furthermore, the pressures could potentially increase in price as the unscheduled emergency meeting of the Financial Stability Oversight Council, combined with an undisclosed bank tapping the Fed for $60 billion in liquidity, further supports that the US banking sector is not strong and resilient. After last week's wild swings, the market's expectation seemed to have relatively calmed down as markets anticipate the next decision or news from officials which could provide some insight into future monetary policy meetings. The possibility of the Fed hiking interest rates further could weaken the price of gold, giving the negative correlation of gold's price with the USD. Should the Fed's rhetoric switch back to predominantly hawkish, we could see support for USD, leading to outflows from the precious. Thank you for watching.